Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a business valuation expert in St. Louis, Missouri. I have the pleasure of interviewing Alina Rivera today. She is a CPA, a forensic accountant, and valuation expert in Puerto Rico. The other thing is everybody knows that cash is king. Everybody knows that cash flow is important, right? We all get that. But for business valuations, why is cash flow so important for business valuations? And let's talk a little bit about the cash flow, and the risk. And those are two really big, important components of valuations. But how do you see it when you're talking to clients?
Well, when we are talking about business valuation and the information that we use, especially the method that we are using, we talk to them about where the business is going, right, in the future. So those cash flow will have embedded that the way that you see your business in the future and the result. Because at the end, someone is buying, what is buying is what the business is gonna provide to them in the future, not what it is today. So in that particular area, we talk to them about, let's talk about the cash flows, how you see it. Probably that's the method we are going to use, discounted cash flows. So you will need to use cash flow for that analysis. So even in the name, if that's the method that you use, result in a very important part of that analysis. And in terms of risk, when you talk about risk, it's, I think we talked before about thinking of a business that is just starting. So now we have seen in a particular case we have a fund that is trying to acquire a business or put money in a business, and they are saying no, you have this particular discounted rate that you're using, and we want to use a higher rate because those cash flow that you are predicted, I don't know if that is going to happen. So in the area of risk and the discounted rate, they are putting a lot of additional risk in that specific risk of the business. So all of those things are put together in that business valuation. So don't think about the cash flow as, okay, I needed to survive now, but also about the value of your business and how that is going to impact the value of your business in the future.
Yeah, because sometimes business owners get in this mindset, and you are in accounting as well, but sometimes business owners get in this mindset of, I just want to lower my taxes. I just want to make sure that the cash flow, and even at the end of the year, they're like, spend it all, do whatever to make sure that we don't pay taxes. And then you go to sell your company, and now you've shown that you don't make a lot of money, but there is cash flow. And so part of it is trying to reconcile that in your own mind of how you create it and the risks involved in creating that cash flow.